I assume you're longing it. Yeah, your larger time frames are looking very good here. Very solid, and we're at the bottom of the range. So, and that's a longer term trade. You need to make sure you know that. But yeah, pretty good trade. What's Bitcoin doing right now? I don't even know. I haven't looked at the charts in the past couple hours. But as you can see, with our alerts, right, as they are spamming, when they're spamming across the board over multiple coins, then that is usually a pretty good sign. What I love to see as well, though, is Bitcoin doing the same thing too. So we see 2203. That was I don't know, somewhere here maybe, right here. So that's those are pretty good, and that's actually something that I want to cover as well, because what Hubert did is he took these indicators and he took the signals and he started scalping it on a 1, 3, and 5 minute, and it's been doing really, really well, just banging out trades all the time. And that's something really important to, like really cool to see. And I can just go over what he was doing. He was looking at the 135 for an alignment and 15 and 30 for the bias. So whereas if we look at higher time frames, this is actually exactly what we want to see. Here's the overlay, by the way, and this overlay is the one that you see in the signals, right? All of this I've quoted in the past, I don't know, 1 or 2 weeks, but that's the overlays, that's the signals that we see. And when we have a bearish overlay together with the signals, then a move of depending on a coin, but a move of 1 to 2% is usually there. So trading that from the top of our stochastics, aligned of course, to the 1, 3, and 5 bottoming out is actually a pretty good trade across the board, which is really cool. And then also what's very important is how we enter. That's something that we're going to cover again today. We covered it a little bit yesterday, but looking at this together with Fibs too, but looking at this and making sure that it makes sense. We touched the top here since our range started, but what we want to see, let me just delete this actually, but what I want to see here is how we enter, right? And that's usually I'm just going to call out Cypher on this one. When we're in the same trade, I usually have like better entry. The reason that is because I layer those entries. So whenever we have a signal, say, because that's usually what's going to happen when you trade bots or when you trade signals, the signal could trigger here, right? And then you would have some movement to, into profits, and then it's going to try to stop you out. And, stop loss hunts is something that happens very often. But when we set up the trade here and we're like, okay, well, we hit this level, that was the top. Let's look back. Okay, what's the previous tops here? Where the previous stop is here. So what we're going to do is we need to put our stop loss at least above these levels here, plus some change, right? I'd probably put it like this, and that's a pretty tight stop loss too. But that's not where we stop, right? We enter here, say we enter with 20% of our account, but then, in case the price goes up, which happens very often, in case the price goes up and tries to hit other people's stop losses, right? Essentially a stop loss hunt. What we do is that at those exact times where people try and put their stop loss and get stopped out, those are the times where we actually enter. So what happens is we layer those entries there as we enter here, and in case we pick it up, we pick it up right away. We improve our average entry by a lot, and we have a much smaller risk to a much larger reward, and that way we are positive in the trade for essentially most of the time. And when we do that and we anticipate the layer that we of support and resistance, because what we trade here obviously is trend reversals, right? So as we get a short signal here, we're guessing that the trend will reverse to the downside, will bounce down, and as that happens, our theory is that it will bounce off of this level. So we will layer in our orders rather than just having one order and, you know, probably just FOMO in at the bottom. Because if someone does that, let's say there was an entry here, right? And you missed it because, I mean, you missed like 1 or 2 minutes and the price is lower down, and you see, oh, there's, you know, the move left without me, I'm just going to enter here. Well, what happens now is that you have a huge downside here. You have a huge risk, and as you can see, you've been more in a loss than you've been in profit in this trade. What's the other option? The other option is like, oh, okay, the trade left without me, right? The train left the station, but what I can do is, like, this is not a good deal for me right now, but what I can do is just add in orders at the top, and if they hit, they hit, if they don't, they don't. And what would be the result of that? The result of that would be that our average entry would be like somewhere here, right? And we would actually be in profit 100% of the time. So we spent more time profitably in the market than not, and that usually tends to reward us quite a bit. So that's something very, very important to note, and something we covered yesterday as well, but something that is important to cover multiple times. So whenever, like, let's say, and I like trading this, I like trading ranges, right? So we got to make sure we're in a range, which in this case we are. We're going up and down, up and down. So whenever we have a signal here, a long signal, a short signal, again, this is a prime signal here with 2 indicators overlaying. So we have our color indicator, which is the indicator that sends out signals, and then we have our topping and bottoming signals, and then we have our score indicator that looks at the stochastics, basically what we've been looking at over all other time frames, and that will tell us if it's whenever there's an actual long or short. So as we have those at the same time and they overlay, then that's a good trade. And whenever we have this trade, we're at the bottom of the range, we can be like, okay, well, this is a good scalp trade. Our downside is very limited. Our upside, you know, is pretty high. And then we're just going to trade this till the 3 and 5 minute top out. Very simple. And those, because we have those confirmations, like, yeah, you might have to wait a little bit in order to get those trades, but those trades are high probability trades, and just, you know, doing 1,000 of them, you'll be doing pretty well. You would exit right here the second the 3 minute tops out. A 3 and 1 I like to look at. So and these trades are like, there's probably like 100 trades like that in a day on different coins. Of course, we want the markets to agree and all of them to work together. So I don't like to, you know, long Solana when Bitcoin's just dumping. Doesn't really make sense. We want everything to be in alignment, and the other important thing is that when we look at stochastics, what we want to see is we want to see some sort of oscillation here, right? We don't want to see something like this where we're just chopping around one side, because then we have a much lower validity of that indicator. What's a good validity though is that if the stochastics bottomed out and just chopping around the bottom and then tops out, that's usually an indication for pretty good short, because we've been at the bottom all the time and now we topped out. It's probably just a reload into a further move down, which in this case was actually pretty major. So those are all, you know, intricacies, but if we want to look at very, very simple trades that we can trade, which are not like, we don't have to be right about a lot of things in these trades, right? We don't have to be right about levels. We don't need to look at the overall market, what's going on. All we need to look at is, okay, what are the lower time frames doing? Do they align with what we want to do? I usually just look at the overlay here so I can see what the 5, 3, 15, 30, and 1 hour are doing at the same time, but we can just go through these time frames turn off and go through these time frames. So, you know, at around this level, I'm just going to put it here and then adjust it. 5 minute stopping out, going down. 3 minute stopping out, going down. 1 minute is topped out, going down, topped out again. 30 minute is topped out. Pretty good trade here. We don't have to even bet on the entire move. What we can bet on though is that all this alignment, right, plus the top of the range, plus all of that, means that if we get a good entry here, then the chance that we will bounce at least a little bit is pretty high. And that's something that we're going to do. So, so as we get the entry, right, we can enter a little bit, but something I always do is I layer trades above that. And this is how it would look like. Let's say I get the signal now, the price starts dumping, right? So maybe I will catch this trade here. But what I will do is I will add layers close to the stop loss. The closer I get to the stop loss, the bigger my orders are. And then as I hit them, my average entry will actually move considerably higher, which will turn this trade from being down for a long time and having a maximum 1% profit to being up like basically 100% of the time and having a max, as of this point, having a max 1.5% profit. So I just increased my profit by 50% and I minimized my risk from say 0.7% to 0.25%. So essentially a third. So I increased my profit by almost over 50%, and I decreased my risk by 66% or 60%, just because I put the layers here and I anticipated the trade that I was betting on in the first place. And on these orders, if they don't work out and we get stopped out, then the loss on these orders is much smaller than the loss of the original order that was here, because the distance that the price moves is much slower to the stop loss, obviously. And what I like to do as well is right before my stop loss, I like to put in like a juicy order in as well, because the loss on this stop loss is very minimal, right? Very minimal. Plus, putting a sell order here helps, and this is, if you trade with $100, it's not going to do anything. But if you trade with, a couple million, then putting an order here, a sell order here, actually is a pretty good resistance to your stop loss in the first place. So on XRP, that would be something. If you would put, with leverage, if you put an order here of like 3, 4, 5, 6 million, then it would take the market some kind of liquidity to break through it. So in that case, that will help in the trade. But yeah, that's something. That's the way we want to trade. Is we want to make sure that the range is established, and then whenever we have trades, we don't just jump in right away. First of all, we analyze the situation, but then we see, okay, what level of the price can the price still go to, and it's still a valid trade for us. And above that price, obviously, it's a trade invalidation, so we want to be out. But up until that point, it's a discount of our trade, so we just get a better entry. And if we trade these, then like your account is gonna thank you, because you will have a much better entry than anyone else. Like if someone told you, someone said you have this trade, but your entry is right here, they'd be like, how did you catch this trade? Like, that's crazy, right? And you didn't sit here and catch it. That's not what you did. What you did was you anticipated that trade, and then the price came to you, which is not something that's hard to do. Like when you look at a range and you anticipate that the price will go, in this area of the bottom of the range, well, that's what it is. Also, a pretty important mechanic in the market is that when we have a range, let's say this is a level, right? we have a range here. And for us to break out of the range to the upside, what happens very often is we break the range to the downside to scoop up a little bit of the liquidity and do the stop losses. So yeah, that's something important to note. Other than that, so if you put our stop loss just here, like just down here, and try to long, then the chance that we get our stop loss, if we get our stop loss hit, then we're not going to take this trade, and we're going to be on a loss in a trade that we will be right anyways, because we got stop loss onto it because we put our stop loss too tight. So rather than putting the stop loss too tight, I'd rather put entries here where other people put the stop loss and then put the stop loss lower. So and it still makes sense, it still has validity, and you're not actually risking more, because if you enter less and then put in more trades later on, so let's assume you entered here, right? You put the stop loss to the next level, but here you actually add in layers. And as you do that and you add in layers, then your average order, and this is too many trades by the way, I would put one here, one here, and then closer to the bottom, something like that. So you'd hit this one, so you'd probably have like an average order entry here, which is a great trade. It's a great entry, right? Instead of, getting your entry here, stop loss here, being stopped out, being in a loss, and not even taking this move. So yeah, that is something very important to note. 1 second, I need to check something. Here we go. Okay. Yeah, right. So thinking this way and anticipating the trade rather than just jumping in and reacting is going to put you on the other position of the trade. So that's very, very important. I literally talked about this with Moon yesterday. We do the same exact thing. I just do it in multiple markets at the same time. Yeah. So Ray, if you, for your information, when we have the, so these are our day trading strategies, right? And then we have our dashboards, which are essentially the strategies that we've been using to trade long term for investors. And the way we do that is the point of them is for them to be as consistent as possible, to always deliver a predictable amount of results over years. And how do we do that? Well, it's much easier said than done, but really those strategies are generalized and they're working, but we analyze how the strategies work, why they work, and then we bundle them together with strategies that work in the opposite, right? So let's assume that this strategy, what I just described, is a trend reversal strategy, right? We long here, we short here. We long as in the trend reversal, as the price goes down, we assume that it's going to bounce and go up, and we short on the opposite side. That's what our indicators are doing as well. Not sure why it's not loading. But then what you can have is a trend following strategy, which basically is a strategy that when we are in a move, it will catch that move and it will assume that the move will continue higher and trade that move, right? So the trend reversal strategy, our range trading strategy, has a much higher hit rate, meaning that it's right more often, but the trades are much smaller. The trend following strategy is right less of the time, but the moves, the wins of that strategy is much higher. And we bundle them together because when does the trend following strategy not work? The trend following strategy does not work when the price bounces. When does the trend reversal strategy not work? The trend reversal strategy does not work when the price doesn't bounce and keeps going up, which is when the trend following strategy makes money. So what we do is bundle them together. We bundle like 9 strategies together that are negatively correlated, and those are our dashboards. That's something that we're trading. So if we go to the dashboard, yeah, for example here, this is what the turtle, but what I can do is I can go to the bundles real quick, have this load up, and these are the actual bundles that are trading. Let me hop on bundle 4 real quick, let it load. This is bundle 1, but as it loads, you will see the strategies that are trading in there, and you see these are 9 strategies. All of them are trading at the same time, and the result of that is that we have consistent strategies, because the individual strategies that we're trading have their ups and downs, but we have other strategies that turn that around and you know, when one is not working well, here we go, when one is not working well, the other one is. When you look at these big spikes here, these big spikes are when there is big runs in the bull markets, really. And the reason that's happening is because we have our allocation of our consistent strategies, and then we have allocations of on our altcoins, and those altcoins are usually performing pretty well. Like right now, Phantom is up 30% on spot, and so whenever there's a big price move, we catch them with altcoins, and that's a very, very simple trend following strategy, whereas say the bullies are trend reversal strategies, which generate the consistent returns here. So that's literally what we're doing. Let's take a look at Doge. Let me take a look at Doge real quick. Give me a small analysis what you see. Let me go to Doge. $15 minutes. Okay, let's look at our overlay. Our overlay is top P. We got our short signal. So, you know, short term, you know, touch of the range or at least some movement to the downside is possible. On the 15-minute, we got our overlay here, which means that you know, this itself can be the move. Let's see what the smaller time frames are doing. Yeah, so our smaller time frame are 3-minute, which is nice to look at. Shorted here, and is going up now. 5-minute bottom is going up, but starts going down again, which is interesting. 15-minute is turning around, so a little indecisive here. Higher time frames though. Higher time frames are in the move. So my guess is that there's still some choppiness and downside on the short term and mid term. Probably what's going to happen is this 3-minute might top out. We've seen the 3-minute is starting to go up quite a bit, right? But the price isn't really moving, and neither is the score actually. So as the 3-minute is going up, other things are going down. So as this 3-minute tops out, that would be a good reload for a further move down. But then when you look at the higher time frames, they're pretty bottomed out, which would give me reason to believe that, you know, we might have some upside here at, you know, not long term, but like mid-ish term, not at least not scalping terms. So that's what I see. Yeah, should follow XRP on the 4-hour. Yeah, let's take a look. But yeah, I agree. Higher time frames are pretty bottomed out, so some up move on higher time frames makes sense. What's very important to note, for you know, at the risk of stating the obvious, when we look at 3 and 5 minutes, right, then, well, those are the candles. So this move, for example, if we traded this move, then it took us 7 hours. When we're on the 4-hour time frame and we would trade this short here, then that would have taken us 2 days, right? So that's something important to note. Because when we trade off of the 4-hour, then we need to expect time frames of the 4-hour, which is like, okay, I'm longing here, but it might take me 2 days to get there. So in those 2 days, you know, I'm not going to be looking at the 1 minute and see what it's doing, because I'm at a much larger time frame doing something that is yeah, so that is a completely different world of the aspect that you're trading with. Yeah, you can open a strategy on the dashboard. I'll check at it. Maybe your username has expired. I'll just check, and it's gonna work. So, you know, looking at this higher time frame, right? Not even looking at the lower time frames, this looks like a pretty good bounce off the long. What I would do if I would, you know, have to enter right now, I'd obviously look at the higher time frames, which are helping me, except the daily. Let's see what the 12 hours is doing here. I'm just gonna add it in real quick, because I like to look at it too, partly. Okay, it's bottomed too, so that's pretty good. The daily is pretty slow, right? So like if the 12, 8, and 6 start going up, it's just gonna turn around the daily. But our 4, 3, 2, and 1 are kind of moving up. The 1's pretty high up, which I don't love, and the 30 minutes going down. So you might be a little early here, because the 30 minutes should kind of finish its move. What's the 15 minute doing? Okay, so the 15 minutes kind of, so the 30 minutes should finish its move, or at least turn around. And for that to happen, you know, we can see some downside. So I would definitely add in layers. Oh shit. Definitely add in layers here. And what's important to note, good rule of thumb, is wherever you think that the stop loss should be, look again and put it a little bit lower and manage your trade according to that, because that's usually where most people will put their stop loss. So put it a bit lower, and wherever you put your stop loss at first, put a nice juicy order there. So right now there's too many orders here. I would take probably this one out, put this one here, put this one here, this one here, and this one a little bit lower, something like this. So assuming that I enter with 20% here and I hit this order, probably going to be around here without my average entry. Hit this order, probably going to be around here. This order probably going to be around here with my average entry, which would be a pretty perfect entry, right? So again, I let the price come to me. I am in no rush. This is on a 30-minute time frame, so for the price to come to me might take 2-3 hours, which means that I'm not going to sit here and look at the 1 minute and see if it finally hits my price. It could, but you know, it could be some time away. What I love to do is I want to make sure that I set up the trade, I set up my layers, I set up my take profits, and then especially at the start of the trade, I don't like to look at it. So I set up my layers, I'm in, right, whatever, or I'm not in, I'm just waiting for those layers, my stop loss is there, and then I just look at something else, I do something else, and by the time I come back, you know, you're either, you know, you can be stopped out, or you're, you know, in profits with, you know, a little, with your, you know, entries hit, and that avoids you know, micromanaging the trade, which is something they shouldn't be doing, especially when you're trading on a 4-hour time frame. Because when you're trading on a 4-hour time frame, well, that's what you're trading. You don't want to move that quite a bit. And what I also like to see, like, you know, when I have some lines drawn out, I don't mind using them for take profit and stop loss levels, because there was a reason I put those lines there in the first place. In this case, probably was layering something else around here. So Doge long makes sense longer term. Short term could be a good discounted entry here. And XRP, probably the same thing. The 1 hour is looking much better. 2, 3, 4, 6, 8, 12. They look much better actually. 30 minutes topped out. So once again could have some downside where the lower time frame is doing. They're topping out too, actually all of them. So once we see some downwards movement, and these ones are shorting here, so once we see some downwards movement on the 1 minute, it should take the 3 minute down, it should take the 5 minute down, it should take the 15 minute down. It could take the 30 minute down as well, which would all bottom out, or at least go down, lower time frames bottom out and move the 30 minute back up, which then moves the 1 hour plus further up into the long move. So that downside could help us with getting a really, really good entry right here. So what I would love to do if I'm trading casually is wouldn't enter here. I would put a bunch of orders here, and then if they hit, they hit. If they don't, they don't. I'm just gonna leave it as is, and I can check back in, and by that time, what can happen is that I picked up some orders that I delivered here. And that's something nice to look at. Is something that we can anticipate because we understand the strategy that we're trading. We understand that we're trading a trend reversal strategy, and right now the price is at a pretty good low. But as we see, what's happening is that we can touch these bottom levels as we did multiple times. So we cannot just hope that the price isn't going to be there. It wouldn't be responsible for us to do so. Instead, we can anticipate that the price can go there and put in orders and profit from the fact that the price might go there. So that's a pretty important point here. Okay, what else do we have on schedule today? So setting our stop losses and take profits, very important. XRP and Doge look on a higher time frame look bullish. Solana is doing well. Same situation here. If we look at the higher time frames, though, we do see some upside. And now let's see, does Bitcoin agree? Have it load. Okay, might see some upside. And for reference, when I was looking at different strategies that I've been developing, Bitcoin is actually longing there too, which might be interesting. I'm not sure about the dashboards. I don't think that anything is longing here on Bitcoin. We do have some ETH longs though, and obviously FTM. So there's that. So revisit this level makes sense. I wouldn't trade on Bitcoin. I'd rather trade the small indications and strategies that we have here, which even a Solana short makes sense when we have our conditions met and we are at the top. Even if Solana on a high time frame is a straight move up, which it very well might be, on a lower time frame we still have quite the bounce here that we can take profits off of. So the lower we go, the more of those we have. We just need to make sure that we have our alignments there to trade those. We don't have to trade all of them, but we want to make sure that the ones that we trade are high probability trades. And rather than just trying to catch the move or trying to trade, what we want to see is this a good deal? Do we right now have a good deal with this trade? And if we don't, how can we sweeten the deal for ourselves, right? We can anticipate the orders and say, okay, right now the deal is not that good, but if we just add in, if we just anticipate the orders, and if we hit it, we automatically are in the trade. And at that point, it makes sense to enter a trade because it's a good deal. And then also understanding the movement of the market and what we're trading in the first place, right? We're very often in the Discord with our trend reversal strategy, with our stochastics, we're trading trend reversals, right? We're trading ranges. So first of all, we want to trade when the price is in a range, right? We don't want to trade situations where there's a huge dump and we're trying to long that. Right, we're not trying to catch, something in the middle of the move, even though the stochastics are bottomed out. But that's what's happening because we understand what stochastics are doing, which is that they're oscillating and they're showing us where the price is away from the average in a range. If we're not in a range, then the stochastics don't work. They're at the bottom. They don't do anything. And then at the time, once they get unstuck from the bottom, then we're like, okay, now it makes more sense. And then again, the stochastic is looking at historical data, obviously. So once we have a big move here, it will take a couple candles for it to recalibrate. And we ideally want to trade trades where it is calibrated. Let's see at the overlays. Right, so we had an overlay, meaning that the 135, 1530, and 1 hour all bottomed out here, which is, at the bottom of the range, but we went quite a bit lower. And right now we're still lower. And that's just because we had a huge move down. So at this point, we don't want to trade. We want to trade when the market is calm and ranging from trade to trade. Short was great. Short here and here as well. Here, even though the short, we went further back up, there was 15 minutes here that were a viable trade, which when we're scalping is plenty of time to trade that. Need to have this load. So right here, entry, looking at previous levels, if they load, putting a stop loss above those levels, not loading right now, but whatever, hit those levels, so say having an average order here, and then exiting once the 5-3-1 minute bottom out, which should be right here. So even though we had a big move, or we continued further to the upside, we have a viable trade. And again, by the way, so those are same thing here. So that's really understanding the strategy day trading is very, very important. So even if you were just trading the signals mindlessly, right, your success would be so much higher if you would understand what you're trading in the first place and why those signals are there and how they work, because you're able to manage it in a way where you're always at an advantage rather than trying to chase, which is something that most retail traders are doing, which is why most retail traders lose. And then the other thing is a difference in personality, right? So I personally like to see setups that happen commonly, and I want as many of them as possible, and I want to trade those. Which is, that's why I look at lower time frames too, where we can scalp, right? Which is something that Hubert likes to do as well. Saifa, however, is looking at the 4, 6, 8 minute, right? So he likes to look at a little bit larger trades, which are larger moves, more profits, less headache, right? I like to look at the setups, and I like to see the bounces and basically bet on the fact that whenever we have overlays, we have bounces, and trade those bounces, which is a completely different style of day trading, really is scalping. And as we do that, the advantage of that is you have many trades in a day, so you can compound the profits within the day, which is something that's very good as well. And then you have the dashboards with completely different strategies, which are strategies that trade, once or twice a week with, trading lengths of 5 to 10 days. If I go to the strategies real quick, log in there and go to, say, the turtle, for example, which is one of the most profitable strategies here. Wait for it to load real quick, which, by the way, just exited it a bit early, but hey, it is what it is. And if we look at the live data, it's pretty consistent. If we look at the win rate here, it has a high win rate, but the average trade duration is 10 days. 10 days. And the average amount of trades, total number of trades, is 52 over what, 2 years it is, I think, 3 years at this point. So not even once a week. And also what's important is that on average it's down, so it has an unrealized loss of 8% on average, but it still gets an average of 12% in the trade, meaning that with the higher win rate, most of those trades are profitable. But even then, there's times in that trades where where there's a downside, which is important to note, where you're setting your stop loss, right? And this stop loss, by the way, is at 20% here, which is something that you can read in the descriptions. So that, again, completely different strategy from a scalping strategy, completely different strategy from Cypher strategy. Coincidentally, though, this strategy is working on a 4-hour, right? So then if we go to, say, FTM, let that one load up, we'll have a completely different strategy as well. Which that one is one that works pretty well, especially during bull markets, because it just catches most of the moves. But that one works on the 12-hour, right? So much higher. Win rate is much lower, meaning the amount of trades that it wins compared to the ones that it loses is worse. But the ones that it wins large, because the average profit in a trade is 50%, which is very, very high. And the average duration is 13 days. That's 3 weeks, above 3 weeks, or like 2-3 weeks. Well, 2 weeks, but then to the next trade, it's probably going to be 3 weeks. So also something very important to note. So all those things are different strategies, and that's why they need to be traded differently as well. All right, let me switch up. No problem, Cypher. So yeah, those are important things that we want to note when we trade any of these signals and strategies. What are we trading in the first place, and how do we interpret that for our trades, right? XRP's looking good, 4-hour time frame, right? Whereas when we scalp, we scalp the 1 minute and 3 minute, then obviously there's completely different trades and completely different moves in those 1 and 3 minutes. Same on XRP, same on all other coins. So we need to be aware what time frame we're trading, what time frame we like to trade. Do we like high probability trades? Do we like high profit trades? Those are two different things, and we trade them differently, right? Is it a good deal? Meaning that right now when I enter, am I at an unfair advantage when I enter here? When are you at an unfair advantage? If you see this price wick up here and you see this candle fully here and you're like, okay, well, it might shoot up, but all my indicators are telling me a short. So this is the prime entry for a short, and you just market short here, makes sense. However, if you're here, then it might make more sense to set up orders at those previous highs, because that's going to be a better deal for me. And I always want to be, when I'm in a trade, I want to make sure that my entry is better than 99% of the traders trading the same trade, because what that means is that I have much more room for my profits and my losses than other traders. So while other traders are stressing and are unprofitable and are underwater and need to manage the trade, I am all profitable all the time, or my risk is much, much lower than the other traders. And when I have this unfair advantage against traders trading the same trade, then even though other traders could get stopped out, even though other traders will not make that much profit, I will. And as in that case, you extrapolate this over the next 1,000 trades, who's better off? Obviously, the person that has better deals than most other people. So understanding the strategy that you're trading, are you trading a trend following, trend reversal, or an arbing strategy, whatever you are trading, right? A possibility is when you're scalping that really what you're just trading is the fact that you bounce when you have an alignment on the lower time frames. It does not even have to be trend reversal. It's just a bounce. It's a consolidation period in a larger trade, in a larger move. So that is important. Do you want to trade slow trades or quick trades, or trade once a week or trade once an hour or 5 times an hour? Those are all different trades and all different approaches and different expectations of those trades. But every single one of those trades should be a deal that is better than average. So me personally, I don't like to FOMO into a trade. I don't like to, jump into a short when it's here. No reason for me to do that. There's plenty of these moves. I would much rather have a, entry position here, because I like high probability trades. So there's that. Dashboards are doing pretty well right now as well. Anytime there's a large move, then the trend following strategies are picking it up, and every time there's a range, then the range trading strategies are picking it up. And that's the point of them being as consistent as they are, just being straight up, or at least in a consistent line. If there's huge moves in the market or like a big bull run, then the profit usually happens to be much bigger. And also what's good to see is when we have many signals coming at the same time from all different coins, that means that the overall market is aligned, which is an extra confirmation in the trades that we do. So that is something else. I think that's all I wanted to cover as of now. If you guys have any questions right now, ask. Otherwise, you can ask in the Discord. And then tomorrow, tomorrow we'll be live trading more. I'll be showing the indicator, especially for scalping, is something that can be traded, that we can actually have on auto trading, because what we do is we have so many trades that even if there's inefficiencies in the automation of it and you would manually do it much better, does not matter, because there's so many trades on so many coins, and you trade with a much smaller size on every single coin, and you just have many horses in a race, and you just trades all the time. So that's something that we'll be unveiling tomorrow on a live call most likely, and we'll be live trading as well. And we'll take another look at risk management, which is probably now the main thing that most of you need to look at and understand. And that's probably the biggest leverage for you guys right now, and understand that we want to get good deals. That's the main thing. We're not trading in order to catch every move in the market. We're trading in order for us selfishly to make money in the market. How do we selfishly make money in the market? We make sure that our deal is good. We don't care about someone else. We don't care about an influencer, a tweet, or whatever. Is our deal good? If not, how do we sweeten our deal? And we just set it up, and then when it hits, it hits. And when it doesn't, it doesn't. There's a million other trades. So that's all. I'm happy to see most of you here. I'm happy to see Casper and Karina after a marathon of exams. And yeah, that's everything from my side right now. If you guys if you have any questions, let me know. I'll be looking for setups, and I want to discuss setups with you guys, because that's the level we're at. We want to trade as much as possible, but we want to make sure that we filter out the setups and really get in. So like, one thing is spotting the trades, the other thing is executing the trade while having an unfair advantage above that. So that's what we want to do, and in order to do that, the homework for you guys is to spot trades and show them live, and then we will discuss them in the group and enter them as well. I will trade your trades very happily, and make sure that we get good entries, that we get good exits, that we get good profit taking, good risk management, and all of that. And then that's something that we'll be covering. All the trades that we will do until tomorrow we'll cover on a live call, plus the scalping bot, and
plus any live trades that we have during that time. We cannot guarantee that, in the span of 1 hour, we're going to have some good setups to trade. But, if we do, then obviously we're going to trade them. All right, that's everything from my side. If you guys have any questions, let me know. Other than that, I'll see you guys in the Discord.